where traders tend to get in trouble with taking profits too early is they see the P&L value up here and they don't want to give any away, which is definitely understandable. I mean, it's human nature. But we have to understand, okay, price, if it pulls back, it's pretty natural. And once I have this kind of next structure, this is we can consider this, we'll call this a microstructure, right? We have a microstructure here on the 1 minute chart. Once I have that next microstructure built and the candles are actually closed, then I can move the stop up to here. Now, once it makes a fresh high and actually gives me that next higher low, okay, now I can move the stop up again to here, right? Again, sequence continues, makes a fresh session high, higher low, I can move the stop up to here, right? Now you start to get, it's really finding its legs. Hopefully you're taking some off along the way. But as far as a trailing stop, one of the better ways to do it is via market structure. That's going to enable you to capture the trend move. You most likely are not going to nail the true high, depending on, how many contracts you have and where you have your exits already set. But it'll help you capture a lot more than just the 5079 exit. So that's how I'll go about it. Usually it'll look something like this. I have the entry here. I'm scaling out a sum at the session high. I'll start to raise the trail. At each new high, I'll take a little bit more off because I know price is going to pull back anyway. So I'll just take a little bit off at each new high, let that next higher low develop, move the stop up, right? More off here. Okay. And then on a move like this where there's no pullback, I'm usually going to exit the whole position into something like that. Scaling out, in my opinion, is like the way to go. Like that is, it's because number one, it reduces any kind of anxiety you have about holding the entire position, right? You lock in some profits. All right, we have a little less risk on the table. And the other thing to consider here is that risk is dynamic. And so if you are, let me just put a risk chart on here. So if your risk is like this initially, right? We're going entry here, stop is down here. Okay, we can see it's a 1.5 R multiple. Now, as price moves in your favor, if you don't move the stop, what happens, right? Your risk now quickly outpaces your reward. And so with that in mind, as price moves in your favor, the trade becomes, from a risk to reward perspective, it becomes kind of unfavorable. And so the way we mitigate that is by taking off partials.
Got it. Yeah, no, makes sense. Yeah, I thought it was a good level to cut it there. So
yeah, it definitely was. I mean, that was session high. But if you want to be capturing more, right, it's going to be
scaling out.
Yeah, sell some right here and then let the rest kind of work for you. Now, this made a fresh session high. And so the fact that it kind of really broke the high there and then sustained is a good sign. The reason we want to take some off into highs is because sometimes the high will just reject.
Right.
And so it's a good spot to reduce. But in this case, price was coming off of a big higher time frame support. Like you had the bigger picture kind of on your side. And so it was a good one to try and hold on to.